Hi guys, welcome to Trading in Zones. Today we will quickly look at understanding how to place orders. This is one of the basic things a lot of people don't understand, and especially for people who are new into markets and they're opening accounts for the first time with any of the brokers. It's very important for someone to understand in terms of how they can go ahead and open an account and how they can go ahead and make sure that they can place their first order to buy a particular stock. So from understanding basics perspective, let me quickly explain. Stock market is a place where a lot of companies who want to list and ask for investors to put their money in can list their stocks from a IPO perspective. This is a very basic example. They can do a lot, but from a basic understanding, stock market is a place where companies can list and ask for investors to come and put money in their company. So they are going to list their stocks on stock exchange, which is technically National Stock Exchange, NSE, or Bombay Stock Exchange, which is BSE. So these are the two stock exchanges we have. Apart from listing something on stock exchange, for any particular buyer like you and me, if we have to make a trade, then we need to go through the broker. Broker provides us with an interface to buy these stocks which are listed on the exchange, and broker connects their platform onto the exchange. So a broker has a brokerage fees. One needs to review different types of brokers and brokerage fees before he or she decides to go ahead and start trading. So Google will help you do that. You can go and just search brokerage comparison. Let's quickly look at how we can do that. So let me type brokerage comparison. So if you go and do compare brokerage, there are a lot of websites which gives you option to do these things. They will give you option to calculate brokers, topsharebrokers.com. Even the first website which we saw here, Sherkan versus Angel Broking on the chittorgarh.com. A lot of websites, they give you options in terms of comparing different types of brokers. Now let's understand there are two types of brokers. One are known as discount brokers and the others are known as full service brokers. Usually brokers like Angel, Sherkan, Ventura, and most of these brokers are full service brokers. And then there are banking brokers as well. So you might find a ICICI Direct giving you an option to buy and sell through their platform, and as well as HDFC or any other banks. And then where most of the retailers like you and me go are to brokers like Sherkan, or we go to brokers like Zerodha, which is known as a low cost brokers. So Zerodha is one of the famous brokers, and they are to be the number one broker in India. So a lot of new guys start off with Zerodha. Zerodha being the most unstable platform, and that's the situation with most of the low cost brokers, because their platforms are technologically advanced but they are not stable at all. So once you research on Zerodha or Fire's issues, you will find a lot of information online in terms of how many problems they have had and different issues they have, and amount of money people have lost while trading on these platforms. Apart from that, these are some of the platforms which give you the cheapest brokerage option. So still people opt to trade from them in comparison to going to a full service broker like a Sherkan or Angel, or even for a bank who provides you a broking platform or a brokerage trading platform. They also charge brokerage, and banking brokerages are usually higher, though they do offer quite a few schemes which are good to explore, like Kotak and ICICI. They give quite a few options, so one can research all those things and opt for an appropriate broker. Today I will talk about Zerodha. I have an account with Zerodha, so I'm using my wife's account today to give you all a fair idea in terms of how you can place a buy order if you want to buy something for a swing trade or an investment purpose, or if you want to buy something for an intraday purpose. So there are different types of orders. Let's go to Zerodha website. This is the Zerodha website. I've gone to the orders tab here. Right now you don't see anything here. Once you log into Zerodha, usually you get a dashboard page where you'll see all your investment, market behavior, and all the good stuff, including the watch list. I've cleared out the watch list to show you how you can add instruments out here before you make a purchase. So every company which is listed, you can search for those companies. Most of them, for example, I'll take a typical example of people of renowned or known companies. So let's start with Reliance. So I will start typing Reliance, and you'll get to see that you get an option to add this plus sign right over here as to add this particular instrument onto your watch list. So you get the BSE and you get the NSE. You can see BSE right out there. So BSE means Bombay Stock Exchange, NSE means National Stock Exchange. You can add any one of them. I prefer to use NSE, so you can use any of them. There is not much of a difference even in terms of price. There might be a few ticks up and down from a price perspective. So once you have added that, you have now this particular stock on your list and you want to buy this. So to buy this particular stock, you need to add funds onto any of the brokerage platform, and you get an option to add funds right over here. So if you see that there are a lot of menu options right over here on the platform, and you have a menu option right over here as well. So you might want to explore those menu options before you try to explore the entire platform. So you can go and learn a lot of things at Varsity. You can go check your profile, you can go check your console, and you can do a lot of stuff, including understanding different keyboard shortcuts, and also take a tour. It's very important to take these tours and understand the entire platform. Alright, so coming back to placing orders, once you have added funds, adding funds is right over here. So once you add funds on this particular platform, you are good to trade. So let's assume we have added about 15-20,000 rupees and you want to start trading with a small capital, and you want to buy about 10 stocks of Reliance, which is trading at 1400 as of today. So 10 stocks will approximately be around 14,000 rupees. You have added around 15-20,000, so you are comfortable to make that kind of a purchase. So the moment you go on the watch list, you will see buy, you will see sell, you will see market depth, you will see chart, you will see delete option, and you will get more option as well. So you can do a lot with this particular stock at the more option, but I will cover the basic stuff. You press the delete button, this is going to remove it out of the watch list. You press this particular button, it will load the chart for that particular stock which you have selected. You press the market depth button, it will show you the bits, the top 5 bits. Zerodha also gives you option to view all 20 bits, so you can watch a little deeper in terms of where the orders are in the market, how many people are buying, what prices they are bidding, and what is the quantity of their bids and the number of orders. Similarly, on the sell side, how many people are selling, how many orders, what is the total quantity. You can have a look at this particular place. So let's assume we have decided to buy this at 1400, 10 stocks, round off. How do we make a buy? So the moment you go and see your order book page, it shows pretty empty. So I want to now place a buy order, so I click on buy. Once I click on buy, I always see this window popping up on Zerodha, and there are a lot of options which are here, which is very difficult for a newbie to clearly understand in terms of what he wants to do. Because there is an option called CNC, there is an option called market, there is an option called limit, there is an option called SL, and there is an option called SLM. This is the field I would advise you not to touch, because this is something what you might not understand what it does. So you don't have to worry about disclosed quantity. Only thing what we would be worried about is quantity while we are buying and also while we are selling. So one of the most important things you need to understand as part of making a buy is that when you're making a CNC buy, that means you're carrying it forward, and you're carrying it forward for a very long period of time. You can carry it forward for a week's time, till the next day morning, or till couple of months ahead. The choice is completely yours, but it gives you an option to carry it forward for a very long period of time. And that's why we say cash and carry, because we are not using brokers' money, we are using only our money, and we know we have about 15,000 rupees and we are loading that entire money onto this particular stock. and we are buying about 10 stocks which will cost us about 14,000 rupees, and we have that kind of money in our account once we have made the fund transfer. Now, having said that, you can see here it gives you an option to market order. Market order usually picks up the highest bid out of the last 5 bids out here. So if you say 10 stocks and hit the buy button, the moment you hit the buy button, it will go and pick up one of the 4th or the 5th bid right over here. Whatever the price is running in the market, it executes at that level. But given that we have decided that we want to buy it at only 1400 rupees, we need to choose something called as a limit order. What does the limit order do? Limit order makes sure that you are able to buy it only at the price which you want the order to be executed. So in our case, we want to buy 10 stocks at this price only, not at what price the market is currently trading at. In this situation, so you put 10, you put 1400 and you hit buy, and your order gets executed or your order gets placed. And once the market comes down to around 1400, and if there is that execution which happens, then the stocks are credited to you. Usually brokers take a couple of days time to credit that to your demat account. While they hold the stock at the broker account level, it takes 1 to 2 days time for the broker to credit this onto your demat account. You need to be very careful while you are selling the stock what you buy on CNC right next day, especially if it is a banking holiday the next day, and if you end up selling the stock which you have bought the day before, there are very high chances that the stock will go into a short sale. You can Google and figure out what short sale is. A short sale is something which can attract a lot of fine in terms of selling the stock without holding it. So this is technically saying that you can't sell something which you have not bought, right? So it's very, very important that you need to have something in your account to sell that. So when it is not credited to your account because of a banking holiday, if you go and end up selling that stock, it becomes a short sale, and the exchange charges you a certain fine based on a certain process, and you can search for that online. So it's very important that you buy and you understand that it takes a couple of days for it to credit onto your demat account. If you're buying and selling the next day, make sure that the next day is not a banking holiday. So having said that, that's about limit order, and we understood what market order is. We can also keep something called as a stop loss and a stop loss market order. Quickly understanding what stop loss is, you can keep stop loss GTT order. You can click on learn more here, and good till trade orders. You can figure out how to set a stop loss and how to set a target. But I will quickly explain to you what a stop loss order is. So once you have made the buy and the buy is executed, now I want to keep a stop loss at a certain price. Let's assume if I lose 1000 rupees, I want to get out, and my risk is only about 1000 rupees on this particular stock. So a 1000 rupees risk at 10 stocks would make the stock move at around 1300, right? So if the price ever comes down to 1300, I want it to exit my position, and I want to keep a stop loss. Now when I keep the stop loss, I need to keep updating this on a daily basis because the order would auto cancel end of the day. So that's the reason we have these options to keep the stop loss on a GTT basis, and you can enable the GTT order so that you don't have to keep updating the stop loss every now and then. And in the stop loss limit order, you'll always get a price and then a trigger price. It's very important to have the trigger price a little higher than the price. The reason is, at times the stock market can skip the bits. If there is a bit skip which happens on stock market, then there is a very high chance that the price might not execute at 1300. So it's very important you keep it a rupee above, because when the price triggers, you can see by the name trigger price, when there is an execution in the market at this particular price, it automatically puts a limit order for 1300 to exit 10 stocks. And then as the market comes down to 1300, we will be able to exit and we will be able to book our losses, because our loss was defined at 1000 rupees, which is 100 rupees of the stock. We bought it at 1400. Now we are trying to place a sell order at 1300 for 10 stocks. So 100 into 10, we will lose around 1000 rupees if this hits my stop loss. So what if the bid skips? This is something which a lot of people are worried, especially future traders. Futures, options and derivatives is a different segment altogether. Very risky segment, and at times the bids always, or more or less very often, the bids skip on a futures instrument than compared to a stock. In those situations, usually traders use a SLM order. What happens in an SLM order is it removes the limit. It is just the opposite of the market order, but it does a stop loss market. So you can keep a trigger. The moment it hits 1301, you will exit. So the moment the price either hits this particular point or executes 1 or 2 rupees below this particular price, the stock automatically exits, and it exits at a market price. Again, as the bids suggest, because you have bought something, you will just sell something at one of the lowest bids out here, and you might lose some money, but from a risk perspective, you are way well covered keeping a stop loss market order than keeping a stop loss limit order. Alright, so that's about it for today's video. To quickly cover on the CNC part, we will talk more in the series of these videos to talk on how we can place MIS orders, how we can place BO and CO orders, what does a bracket order mean and what does a cover order mean, and how you can make sure that you can utilize these trading platforms to manage your risk while you are trading intraday. Thank you so much, guys. Have a wonderful day ahead. Stay safe, stay home. Talk to you guys soon. Bye.